Wilhelm, thanks for joining me.
Thank you.
How does active ownership translate into measurable financial value for long-term investors?
The big question. We call it the sort of $2 trillion question. But but anyway, I think there's more than one answer to it, and it's not simple or just sort of unidirectional. It's more than that. But active ownership, if you think of it at a system level, it has the potential to be more than just a zero-sum game.
Yeah.
It's actually about bringing all the companies, all the markets you investment up little by little.
Mm-hmm.
And you can do that at the market level as you engage with standard setters for more well-functioning markets. It can be with companies, for better run companies, better governance, reduced risks, long-term decision making. And at that level, hard to measure, but I think you're growing the pie.
Yeah.
You're not just trying to make one company return a bit more in an alpha sense. You're growing
Everybody
the pie.
lifts like a
But it's something you kind of have to believe in because there isn't. It's very hard to assess what would have happened otherwise.
Yeah.
But there's a clear role for investors and a clear role for long-term investors and institutional investors such as our signatories. And then you have things that matter much more at the company level, which you can measure. So, for example, how you incentivize CEOs. That is really key to make sure that they're aligned with their shareholder interests. And we know from the data, and when we crunch it, there are some models of pay that are more likely to return shareholders, sort of create return for shareholders over time than others.
Yes.
And for us, it's a fairly simple thing. It's linking the pay to long-term shareholder or long-term share stock return directly, and also the horizon for it. And we can look at the numbers and we can see that the companies that do that return more over time than the companies that don't. And then it's the question, when are you effective? How do you become effective? What types of relationships can you have with these companies to actually contribute to the change, right? So first of all, you have to be effective. Secondly, it has to be something that enhances return.
Yeah.
And there we've done some really interesting analysis now with our climate engagements as part of our assessment of our first climate plan. And it shows that, for example, engaging with companies for net zero target setting, it seems that those companies we engage with are more likely to set those targets than the companies we don't engage with. But again, we don't go in to sort of prescribe what they should do. We say, this is us, financial investor, this is what we'd like to see.
Yeah.
We'd like this type of target, we'd like you to explain to us how you then put this into investment plans and so on.
So that level of influencing creates
Exactly.
that long-term
Exactly,
approach.
and it's a long-term relationship,
Yeah.
and I think it's key to be clear on your objective because you're a shareholder.
Yes.
You're there your role in this system is to ask the companies how they kind of have them account for the return they deliver to you. And if it's financially motivated, then they'll listen, and I think then we have a very clear role as well as investors.
And that creates the win-win relationships with the corporates that you're looking for.
And we know, that's an anecdotes, right? But thousands of company meetings, by and large, it is appreciated. And if you crunch the numbers, and we've done some surveys as well, that's what we see.
Interesting. So how can investors push for alignment with global frameworks whilst remaining cognizant of local market realities?
So this is about the sort of change we'd like to see system level, if you will. We call it market level, system level, same thing. And ultimately, what we would like as a global investor in our case 70 markets, we would like global standards.
Okay.
We invest in global companies. We would like a level playing field.
Yeah.
We would like more efficiency overall. But we realize that that's not the world we're living in. It's not where we're starting from. So it's a sort of first best. But we do believe there are some sort of foundational standards, global standards, we should strive towards.
Yeah.
You have it when it comes to disclosure. You have the ISSB, for example.
Yeah.
For more questions, maybe more of business practices, you've got things like the OECD guidelines.
Yeah.
And we'd like that to be a sort of baseline to work from. Then you have to go in and look at the market you're trying to promote change in, and you need to understand the context. For if it's climate, for example, we know that the climate transition looks very, very different depending on sector and market.
Yeah.
Cement in China, very different from cement in Germany, but both can be on a credible, if you will, net zero transition. Right?
Yeah.
So you need to bear that in mind. And then on the governance side, there are some countries that have very, very specific, quite unique governance codes, but they can be really, really good. And even if they're not completely aligned with the sort of global standard. I think there should be a space for that, and you should recognize where the more pressing needs for change are, and then you should focus your effort there, but in a way which you believe is productive and receptive. And for on the governance side, this is also around attracting capital and growth. So there's a kind of the audience is receptive to it.
Yes.
How do you then bridge it back to the international standards? Well, you have to think about things like interoperability, baselines. What you really want to avoid is fragmentation. So you need to somehow highlight your interest in these local standards, speaking to the global standards in a way which is clear to investors and also clear to companies, so that you don't get just a sort of big sort of burden of reporting, for example, or other things which make the frameworks they operate under unnecessarily tricky, or increases the risk for them, or whatever else might sort of reduce the actual outcome, economic outcome of what you're trying to achieve.
So ideally, global standards, but with a real understanding of local nuances, cultures, governance, practices.
I think so, because A, that's how you're effective. B, it reflects the world we live in. And I think, a little bit of, we should all be a bit humble. Some of these things have grown up in different systems, and, appreciating that context matters.
Yes.
And that starting points matter. It's probably a very good start for actually being effective in promoting the change you'd like to see.
That's lovely. Thank you so much for your expertise.
Thank you very much.